Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading.
I used two of the major currencies to give you an example in here. On the left, in this chart, you'll see the yen, and you'll see that dollar, it's a pretty unfortunate acronym, $YUK.X, $YUK.X. And that's the ISE's symbol for the yen. Again, that's the index that they create and base their options off that index. And by the way, you may notice next to that it says OPRA. These come through on the OPRA feed. That's the options feed. So if you're a TradeStation subscriber or you're considering it, just remember when you set up your data feeds, of course, to handle options, you will need the OPRA feed, and that's, of course, U.S. stock options as well as these options. And in the second subgraph, in the lower section of the chart, you'll see the dollar-yen pair in the interbank market. And as I said, TradeStation carries the futures, the options, forex, as well as stocks. And you'll see that these charts are concurrent. The charts are highly correlated. They're pretty much exactly correlated. The one difference in correlation that may be there, and we studied this last time, so I won't overlap them and detail them the way we studied the correlation last time. You can take a look at the archive. But I will point out that they trade different hours. The dollar-yen in interbank is a 24-hour without the weekend, but the index that the ISE carries is basically a U.S. Trading day. So if you see some gaps and you see some of these bars, daily bars, maybe a little longer than some of these, it may be because certain of the action happened overnight, and the ISE doesn't use a U.S. business day. But you will see that these are positively correlated because it's the same concept of dollar-yen. It's this same expression, if you will, dollar-yen. If we take a look at, and I'm focusing on the majors and the ones that most people would look at, but I'm just using a pair as a comparison basis. Here you'll see the euro. And here we see $EUI.X, so that's the ISE index. That's what the underlying they use for their options. And below that, you'll see the common EUR-USD, or euro-dollar symbol. And you'll see, of course, these appear to be mirror images of each other. And, of course, again, they're precisely correlated as much as they can be within the ticks that may vary, notwithstanding the gaps that may occur because of the trading hour differences. But the reason they're opposite is because the euro commonly in the interbank market, it's the price of a euro, it's euro priced in dollar. And it's the reciprocal that's used for the index on the ISE. So mathematically, it is simply that reciprocal, 1 divided by. To gain the reciprocal, we went through that last time, and in fact, I'll show you that in a little Excel widget in just a moment. But do keep that in mind. So directionally, you have to understand that, and a good way to do that until you're comfortable with it is to use some of these charts and workspaces. And by the way, anything that I show you here, I'll let you know what's customized and what isn't as we go along, and I'll be glad to share this with any TradeStation users. Even if you want a workspace like this, which has no analytics in it, but it's a nice little layout so that you have the symbols and the charts, you're welcome to have this. So that's some of what we talked about last time, just recapping the symbols and the nature of the price expressions, remembering that even though it will in the main move with the spot market, you do have to keep an eye on those indexes and when the New York settlement day is and exactly how the ISE runs those options. We took a look also last time at some of the, focused in again on a little more closely on those two, on the yen and the euro. And I want to recap, but I want to show you something a little different. And if you didn't see last time's presentation, I want you to be able to see that. Just give me 1 second to reset my desktop a little bit. Okay, thank you. What we looked at last time were these two charts, And what I was pointing out, I was trying to get across the idea of how can I correlate these, and not just correlate these mathematically, but how can I organize my thoughts on these. And in this case, the lower chart is that $YUK.X, that's the ISE index. And I broke this up into a 111-minute chart. Now, that may sound a little obtuse. I always get funny looks when I talk about things like 111-minute bar charts. And, in fact, Steve was mentioning the Forex show in Las Vegas a few minutes ago. This is one of the discussions we had there when I was presenting TradeStation and currency trading was these sort of unusual bar intervals. The reason I chose a 111-minute bar is because 111 minutes is 1/5 of the day. So I created this, the ISE day runs 555 minutes. That's how long their index runs. So what I did is I created a 111-minute bar chart that divides the day into 5 bars, each one of the same length. Now, I get very into this data sampling. By the way, the indicator that you see in the 2 charts or in the 3 charts is a 20-bar simple arithmetic average. I just put it in there to give all of us an anchor, something to look at and hang on to, and it's not there for any major analytical reason. In the top chart, you'll see dollar-yen. That's, of course, the interbank pair. And I have that set as a 288-minute bar chart. And 288 is 1/5 of the trading day of 1,440 minutes. Technically, the trading day is 1,439 minutes. There's a 1-minute, dare I say, ceasefire, during which we reset and quote-unquote settlement the market at 4:59 to 5 p.m. Eastern. But nonetheless, I rounded that 1 minute to a 1,440-minute trading day. 288-minute bar chart gives me 5 bars per day. As a technical analyst, I'm very careful about things like data sampling. I can't say that using one interval over another is better or worse. I can't say it makes or breaks a technical approach, but I think very often that people will approach market data and look for the layout that they like. They'll look for, gee, I like this indicator on a 200-minute but hate it on a 240-minute. And that's sort of curve fitting backwards to a technical analyst or a strategy trader. So I try and start with the basics, which is how should I organize and sample the data. That was some food for thought that we discussed last time. And of course, in doing that, that means that these 5 bars per day cover in the interbank market, that full 24-hour day, cover a different amount of time than these 5 bars per day. So each one is dividing the day into the same number of sampling units, but it's a different population. So I thought we might take a look at an idea on a slightly different approach. Here is the same 2 data feeds, but I created this one a little bit differently. Again, there's no custom easy language in here. There's no custom analysis, but I can make the layout available to anyone who wants it. We'll put my email address up at the end once again, and I can send you the workspaces. So what we did here is we took the interbank pair, this is the full 24-hour day, and I created it as a 15-minute bar. I just figured that's a workable time frame so you can see yesterday's action, and of course this is today right up through now. And I put in the ISE index as data 2 in this second subgraph. There's the $YUK.X, also as a 15-minute, but it covers a much smaller period of the 24-hour day. It's only open a certain amount of that time. And the bars up here that are white are the bars that match this time frame. The bars up here that are painted white are the bars that match this time frame. So I can see during what part of the trading day. Now, it does grab more than the lion's share. It's an early start and a pretty late close, 7:15 to 4:30 off the top of my head, for the ISE symbol. And that's really what we've highlighted up here in white. So now instead of trying to get the same number of bars per day, I'm trying to see where the markets actually overlap in their timing. And I can see both the cash and the index. Again, they're virtually a one correlation. And I can also see exactly where within the day that index is open.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.